Yo, we're back again with another video. And in today's video, I'm going to be going over a trade that I took on the NASDAQ utilizing my forever model. And it's going to be trading within a range, identifying daily liquidity. Now, I know a lot of you guys saw the price action today. You thought it was choppy, consolidation, yet it was. But I'm going to teach you how I was able to actually capitalize on this range and still make money in this consolidated market. So let's get right into it. So we have a daily chart here. On the left, NASDAQ. On the right, we have the S&P 500. Now, I want you to identify any sort of discrepancies that you see in this chart. I know that it does look very low probability trading within a range, but do what you can, mark up your annotations before I show mine on the next slide. And if you got that correct, we did have one thing that we saw today in the Discord live before we started equities open. We had a run of previous daily low on the S&P 500 and a failure to run lower on the NASDAQ. So immediately, even though we didn't have an internal range liquidity pool on the daily chart, we were still able to utilize this daily SMT and a run of a previous daily low as some sort of identification or direction as to where the market wanted to go to next. Now, we've been trading in a bullish trend for quite some time now, and the S&P 500 is at extreme levels, trading at all-time highs. So why would I want to look for shorts when price has been just trending higher consistently week after week? I want to trade in the trend. Continue looking for longs until the higher time frame tells me otherwise. So since we're on the daily chart and we have a run of previous daily low, I'm going to drop to the 1 hour and just look to see if there's any sort of 1 hour key levels that I could utilize as a reference point to frame a short-term perspective like an M5 chart for an execution in that daily range. So let's do that now. Now we're on the hourly chart. And this looks a little bit more clean to me when I started the trading day. And I want you to look very closely before I show my annotations on the next slide. We have our daily SMT, the run of previous daily low on the S&P 500, and a failure to run lower on the NASDAQ. Now, mark up your annotations, anything else that you see, before I show mine on the next slide. If you got this correctly, you can see that we have a dealing range on the hourly chart, a low and a high, and price trading within that range. But you also see that we have a hourly bullish fair value gap that we utilized and tagged, but we did not take out an external range high after we took and tagged that hourly bullish fair value gap. Now, I always say this. When price mitigates a fair value gap and it takes out an external range high, I don't utilize that fair value gap again because it is already taken out an ERL. And we've already done an IRL to an ERL move. In this case, we have SMT divergence occurring inside of an hourly bullish fair value gap. And that's step 1 and step 2 of the forever model. So I'm still utilizing my forever model as a foundation to frame a bias for finding daily liquidity pools. And if you look at the corresponding highs on previous daily highs, we do not have SMT resting at those highs. So I'm utilizing that relative equal high and failure swing on both as a draw on liquidity for today's trading day. So since we have step 1 and 2 of the checklist marked off, all I need to do now is see what's going on the 5-minute chart and see if I could frame a trade based off of that 1 hour bullish fair value gap with SMT and the reaction. So let's go to the M5 now. Wait, really quick. I just want to say thank you guys. We just hit 4,000 members in the Discord, and it truly does mean a lot to me to see all of you guys within the community trading the same strategy just like me that I've developed over the past 6 to 12 months. And if you guys aren't already a part of it, I'll leave a link in the description of this video, but I provide top watches every single week, and I'm always in there throughout the day answering anyone's questions. If you have any concerns or trade reviews or analysis, whatever it is, I'm always going to be there to try and help you out. But thank you guys again. Let's get back to the video. So On our M5 chart going into the trading day before equities open, we have a run of short-term lows here. This honestly looks like a power of three move, an accumulation, manipulation before equities open to a potential distribution higher. And you could even see at the run of the previous daily low on S&P 500 in the fail, this is our higher low, but then we get closer moving towards equities open and we have another brew of SMT. So now I know that below this low, the S&P 500 has already accumulated long positions. So I would anticipate that this low be protected and us moving into equities open, we do not go below that low that we created here. And we have this down close candle from our forever model closing above that change in state of delivery order block, and we're still utilizing this as support. If we move further from here, I called out in my Discord equities open with the SMT at the hourly lows can start closing off these M5 bearish fair value gaps, then I would be interested to take us up to these highs and the relative equal highs on the S&P 500. And I said, we have bearish PD arrays on this manipulation leg here. I was not utilizing this candle because if I executed here with my stop loss at the candle low, I would have been taken out of the position. But I said before moving into actually taking an execution that I wanted to see bearish PD arrays become violated. So I waited for this M5 bearish fair value gap to get traded through and create an inversion gap. And when we did that at 9:25, that was my first trigger to execute my position. Because I know a lot of you guys are probably already thinking, Matt, this is the candle that swept liquidity and created our higher time frame SMT. Yes, it did. And if I executed on the candle post us closing above the opening price of that specific one, I would have been taken out of the position. But I even said this, that I needed to see at least one bearish PD array to get violated for me to then lay on risk into the marketplace. And we did that here, and I put my stop loss at the low that was already taken on the S&P 500 and failed to do so on the NASDAQ because that was my guaranteed protected low moving into the trading day. And if we move price forward going into 9:30 and fast forwarding to my position, because I had my stop loss here and a 1 to 2 risk to reward was sitting at 20,479.75, reached our 1 to 2 risk to reward. And after we reach a 1 to 2 risk to reward, you guys know what I do next. It's either I close the full position or I put my stop loss at break even and I'll hold a runner to an external range target. And the external range target was what I was showing you on the hourly chart, which was previous daily high, that hourly external range high. I adjust my stop loss to break even and then I leave my last runner to previous daily high. But I want you guys to notice something here. Another reason why I was so strong behind a bullish bias, look at the daily chart on the S&P 500. What do you notice here? This is a flat top high. And if you guys don't know anything about flat top highs and flat body bottoms, these are labeled inefficiencies in price delivery. So they can be identified as magnets and you can expect price to draw to those points of interest. And with our hourly SMT, our daily run of previous daily lows on the S&P 500 and the failure to do so on the NASDAQ, I had so much confidence in price moving higher rather than trading lower with us already confirming our initial long entry. And I knew that S&P 500 had to play catch up to that flat top high to rebalance that inefficiency. So if we move on with price delivery, we reach and take out previous daily high, but we still have room to move higher on the S&P 500 because that flat top high is still there. Now look at what happens. Just like I said, that flat top is an inefficiency in price delivery and it needs to be rebalanced. And that was the magnet for the day. Once we created SMT divergence at the beginning of the day on the hourly, that was our low of the day and price utilized that as our manipulation to then drive higher to rebalance that inefficiency and for NASDAQ to take out its previous daily high. Now here is my execution on Tradeovate with my execution down to the lows, my take profit levels, and the final TP at the previous daily high. And I called all of this live in my Discord. Here is the signal where I said buy, my stop loss placement, my take profit, which was the 1 to 2. Now if you guys want to trade with me live and see my analysis beforehand and all of my executions, just click the link in the description of this video. But I hope you guys enjoyed this, learned something from it, and like always, stay safe, good luck, good trading, and I will catch you guys next week in the next upload.